The US election is the most highly anticipated thing right now. And obviously, as a trader, we need to prepare ourselves, plan, and just be ready to capitalize on the volatility that the election will inject into the market. Now, the reason why this is very important is because there are two types of traders. We have the reaction traders and we have the patient traders. And so in this video, I am going to show you exactly how I prepare myself so that once we have that liquidity, we can take advantage of that. And the tools that I am using to stay ready, to stay chill, cool, calm, and collected, and just be an observer of the market. If you are new to the channel, subscribe. Let's jump into the video. All right, so if you think about this current state, it is just like waiting for the news. And news do two things. We either go towards stop hunting traders, or if we have already stop hunted the traders, then we are now going to TP if you are in the trade. And so these are the two things that I have to wait for, regardless of whether we have news or elections or whatever is happening. The strategy remains the same. And so what exactly is the strategy? So remember, the goal is to sit back and relax and let the setups come to you. That is the easiest way to trade. So the first thing is what we call the 3-day cycle. 3-day cycle. And to summarize the 3-day cycle so that you understand it, imagine we have day one giving you a bullish candle. So we have not traded on day one, we have just observed the market. And we create that high, we create that low. So this is a daily candle, it's bullish. Now, the second candle, which is day two, has two potentials. In fact, three things that could happen. Number one is the next candle can just be an inside day like that. It does not touch the high or the low. We are not interested in this. The second one can be what we call a breakout. And a breakout is when price breaks out and closes above the high or the low. I will use the high. I like shorting. And then the next scenario is a situation where we break out and then price comes back into the range. And this is what we call a failed breakout. Price had broken out but failed to close as a breakout, and so it failed. And this is our signal because we have the day one, we have the day two, and then now we have the day three, which is the reversal. And so this is, to me, what I call the 3-day cycle. And it's not new. This is not something I invented. It's called CRT. It's called failed breakout, whatever you want to call it. However, this is a simple 3-day cycle model that we will use in the elections. So let me show you an example of what I mean. So if you look at my watch list here, we have sells and we have buys. So why exactly would I want to buy? So for example, let's look at silver. If you look at silver, we see that price has been on a downtrend from this is Wednesday. So Wednesday goes down, Thursday continues going down, Friday continues going down. So in a nutshell, if we go to the daily time frame, we've just been breaking out. So notice this, we have this Wednesday, we have this Thursday is a breakout, we have Friday is a breakout. But notice how Friday closes. Friday breaks out, so this is the low. So Friday breaks out, I think it's a gap or something. And then boom, look at the close. It closes back inside of the range. So the 3-day cycle is we have this one candle, which is Friday. And then we have this next candle, which is Monday, which clearly broke out and then closed back inside of the range. So obviously on Tuesday, we are looking to buy. It's as simple as that. So we don't need to complicate anything. That is as simple as that. Now, for, say, for example, let's look at oil. If we look at oil, from Wednesday, we've been on an uptrend. So price goes up, price goes up. On Friday gave us a failed breakout, but look at Monday. Monday has broken out and closed above the Friday's candle's high. So what do you expect price to do? This is a sign of strength. So obviously expect price to continue going higher in this direction. So you don't need to complicate your trading. You just need to have a set of rules and a simple edge in the market. And all you have to do is just come and execute your edge. So now, say for example, let's look at Euro USD. We have this day where Friday sets the high of the week. So you can see price has been going up since Tuesday, Wednesday, Thursday. Then Friday gives us a failed breakout. So obviously we are now selling. So look at this. Friday gives us a failed breakout. So that is why we were selling on Monday. And then Monday breaks out and closes back inside of the range. So obviously, again, we have another failed breakout, which is a sell signal for Tuesday. Now, let's talk about how exactly we trade, because we need a process. And we wait for price to come to us. So we don't chase the market. Now, obviously, we will have some volatility today because we have the presidential election at 7. We also have news at 10 a.m. today. And so where exactly do we wait for price to come back to so that we can even pay attention to it? So that will be the high of the week. So we want price to come back up here, or the low of the week. So price to come back down here. Now, in our case, if we are selling, we are interested in price coming to the high. And think about it. So we want some volatility to come to the market and then give us a very explosive move towards the high of the week. So while other people think, okay, we are bullish, for us, we look at this and we see, okay, now we have other time frame traders in the market. So obviously, if you see stop hands and if you know how to identify stop hands, then your trading is going to be so much easy, because it's the stop hand that triggers you to start looking for setups. For example, I think Euro USD yesterday, we were looking to sell. So let's use that example. So if we delete everything, let's start there. So you can see this is the high of the week. We know we are selling. So how do we control ourselves? Point here is to stay cool, calm, and collected and not react to every single move that is happening into the market. We already know we want to sell Euro USD, but how and where exactly do we want to see price action go in order for us to start selling? First thing is understanding your sessions. So for London, the time zone is between, or the timing window is between 3 and 5 a.m. And then for New York is between 9 and 11 a.m. And this is New York time. You can change it up here or down here. Right now it's UTC -5 because of the daylight savings. All right. Now, again, we have this consolidation. We want to trade in the New York session. So how do we do that? So we come to the screen at 9 a.m. So we want to let price play out up to 9 a.m. And you can see at 9 a.m., this is our high of the week. So what we want to see is price triggering liquidity up here. So liquidity first. Once price clears liquidity, and liquidity can be a breakout or a pin, we want to identify an area where we have a recent swing low. For example, this low here. This is the most recent low so far. And what we want to see is price coming to this low and then getting rejected before breaking out. Once it breaks out, then now we are in the clear to follow this price action, and then we want to be able to fill this gap at least. So our target would be where this gap started. All right, so let's look at what price does, and then we want to be able to observe ourselves, because it's our actions that determine whether we will catch high quality setups or not. So in the New York session, price just consolidates and it's giving you a level. So this is an area where price is consolidating. So if you get in here, say for example, this is what we wanted to see. We wanted to see price coming to, giving us a swing low and then rejection. So this is also a level. We have price consolidating there. And so it's a valid entry to get in here once price breaks out. So what is the problem, in my own opinion, of getting in here? Is you can get in there, stop loss there, target your low there, but there's still a possibility that price will come to stop hunt you. In this case, I don't see price if price did not stop hunt. So anyway, that is the plan for today. So for example, if we look at Euro JPY, or let's look at a pair that is really near either the high. This is a good example. This is silver. So in the London session, what we want to see is either price coming to this low, then stop hunting it, giving us a level before breaking out and going higher. If it follows the plan, we get in. If it does not, we don't have to trade. So keep that in mind. Just because we have elections doesn't mean you are entitled to trade. It may present opportunities, but if not, the market is not going anywhere. Tomorrow is another trading day. The day after is another trading day. Next year is another trading day. So chill out, relax. This is just normal. So I've been getting a lot of questions about the broker that I use. I use XM, and I've been using it for the longest time, even when I started. And the reason I use it is because they offer a 100% deposit bonus. So if you want to capitalize on trading the elections, then I suggest you use the link in the description to open an account and deposit something, so that, you see, I'm not lying, they will give you 100% deposit bonus. Up to $5,000, bro. So if you have little funds, then this is an opportunity for you to capitalize on the volatility of the markets and the fact that now you have double your account. So if you are correct, then you have so much potential. And so I recommend you check them out, open an account, and let's do this, man. If you got value from today's video, subscribe, and I shall see you in the next video. Peace out.